So Google stock has been down 8.99% over the last month, and it's up 20.66% over the past year. This is a golden investing opportunity for long-term value investors because in my opinion and many others, the stock is significantly undervalued. Now looking at the fundamentals such as their financials, we can see that revenues have been growing over the past 3 years from 282 million back in 2022 to 350 million in 2024. And looking at it from a percentage point perspective, it's roughly a 9% increase between 2023 and 2022, and a 14% increase between 2024 and 2023. And one key line item I want to bring to your attention is the Google Cloud revenues, which are sitting at 43.2 million in 2024 compared to 26 million in 2022. That's nearly a 65% increase. The reason I think this is important is because a lot of companies have begun ramping up their efforts in AI and data centers, and it's nice to see Google also showing tremendous progress in this space. Now, based on this article, Google has 30% growth year over year, while Microsoft and Amazon each had 19% year over year in their cloud business. So it's pretty clear Google is expanding more of its market share than its competitors based on the revenue growth alone. Another important metric to consider is their EBITDA margin and operating margin. Based on this data, Google's EBITDA margin currently sits at 38.68% and their operating margin is at 32.11%. This is a strong indication of a healthy business. Now, one final item I want to talk about before we get into their current valuation is something Google calls a moonshot, essentially a business which has the potential to take them to the moon. In other words, it generates billions in additional revenues, and that is Waymo, the robo-taxi business which is expected to reach about 190 billion by 2034. They're expected to double revenues in 2025 and already have a competitive advantage over Tesla, which still hasn't offered a similar service for customers. In addition, Waymo plans to expand its service into 10 new cities this year, including Las Vegas and San Diego, while already starting service in Austin, Texas this week in partnership with Uber and their 161 million monthly active users. So let's talk valuation. First, looking at my multiples valuation model, I compared Google to companies like Amazon, Apple, Meta, and Microsoft, which operate in a similar environment compared to Google. This resulted in an average PE of 31.75, and multiplied by Google's EPS of 7.72 a share, we reached a valuation of $245.15, which indicates about a 31% discount. Now, if we assume a 10% margin of safety or MOS, there is still about 20% of value left on the table. Therefore, based on this model alone, the stock looks pretty attractive. Now, analyst price targets indicate an average target price of $217.93 a share, with a high of $240 and a low of $151. Based on the current price of 167.11, you can see that we still have quite a bit of room to work with even if these targets are lowered in the future, which I don't see happening since the current state of the market is purely driven by fear of tariffs and the trade war, rather than changes in the fundamentals of these companies. Now, analyst recommendations are mainly a strong buy or regular buy with a few holds, which is also consistent with our analysis of the stock. And Google's forward PE ratio and double-digit EPS growth over the next few years also looks very attractive, with the forward PE expected to be as low as 12.5 in 2028. Thus looking extremely undervalued based on the forward PE analysis. To put into perspective on how cheap this stock is, the average forward PE ratio of the Magnificent 7 stocks as of February 28 was 28.3 times, down from its peak of 33.5 times in Q1 of 2024. So given that, Google's around that 21.44 mark, and it's undervalued compared to the rest of its peers. So with that analysis over Google, I hope you have enough information to make a sound investment decision. If you enjoyed the video, please drop a thumbs up and subscribe, and let me know in the comments below what stock you'd like me to analyze next. As always, thanks for watching.